Welcome, everybody, to another episode of SF Live. My name is Kai Hoffman. I'm the CEO of the Soar Financial Group, and I'm extremely excited to have Trey with me here today. He's the president and CEO of Ely Gold Royalties. But before we switch over to Trey here, just a quick word of note here and some homework before we get started. So please, this is an interactive format. I keep saying that over and over again, but please use hashtag AskELY. That's their ticker, AskELY, for questions. Put those up on Twitter. We'll see those and we'll get through those at the end of our Q&A here with Trey. It's really important that you also subscribe, follow us here on Twitter, but also on YouTube as well, where we will upload the video later on. So please stay tuned and please stay that. And please let me welcome Trey to the show now. And Trey, hold on. Here we go. We got a nice stinger set up to switch over to you. Welcome on the show. I hope everything's well.
Hey Kai, how you doing? Thanks for putting us on here. We're all kind of sequestered away. I'm down in Dallas, Texas, and you up in Vancouver, and it's nice to be able to get together this way.
How are things? Like, how have you been holding up? Obviously, like, we've been holed up here in Vancouver for at least 4 weeks now. Some have been longer. How are things in Dallas looking? Like, how's Texas doing?
Well, Texas is good. We haven't had too big of an outbreak. Numbers-wise, I think we're probably right up there, but it's an awfully big state, so it's spread around. So we haven't had any real localized problems, no overcrowding of hospitals or anything. But everybody seems to be getting their share.
Yeah. So, and I see you're working from home as well, and you don't have to leave home to get to the office, which is quite convenient. So.
Well, I do that anyway. This is I have a home office set up, and I'd have to say for me, last week we were supposed to be in Europe for a show, and next week it was a show down in Scottsdale, and just actually being able to stay home and get caught up. We've been very active with doing transactions, and we run a pretty tight ship. Jerry and I pretty much, get most of it done ourselves. So, it's been nice to actually be home, be sequestered, and get caught up and get all of our deals closed.
That's actually a good point, because a lot of people, and when they're home and they're not working. Like, my email inbox, it's fluctuating. Some people get back to me really quickly because they are working. Some actually go to the office, but not a lot of people, they're busy at home, right? So you guys are actively working on transactions, and one thing I wanted to highlight during this call or conversation as well, or not just highlight but ask, is like, what is the landscape out there right now? Because I'm sure with 1720 Gold and you being a royalty / prospect generator company are getting a lot of inbounds. Can you give us an update on what that's looking like?
Well, it's actually been good for us. A couple of things, of course, we are focused in Nevada, and Nevada's was an area where mines have not been shut down. So there's continued to be activity there, and we have seen people coming back to us. We tend to focus on purchasing royalties from third parties, existing royalties. So we have actually had some people come back to us that over the last 12, 24 months have said no, they didn't want to sell their royalties. Now, I don't know if they're feeling, a bit
anxious,
anxious or scared, or the fact that their stock portfolios aren't what they were before. But we're having people come back to us, so we're actually seeing pretty good deal flow here still, and so we're staying very active.
Correct me if I'm wrong, but you also own projects outright. Is that correct?
Well, we started building the portfolio about 3.5 years ago when I teamed up with Jerry Bachman, an old-time prospector, and we started building the royalty portfolio by acquiring mostly through staking and then selling properties and retaining royalties. So kind of I spent a first few years as more of a project generator, but a royalty generator. In the last 12 to 18 months is when we've used some of the cash flow from those deals to go out and start to purchase producing and near-term producing royalties from third parties.
You've been gaining a lot of traction lately. Your share price went from 30 cents to like I can't remember the high, but you're trading at 80 cents right now. So that's already a nice bump. I think you were even close to 90 cents at one point. But what were the key highlight transactions? I know you got Fenelon, which is a key royalty on Walbridge asset. Right, they're just merging with Balmoral, so that's a highlight. Eric Sprott is backing that one, and you just bought a royalty or NPI actually on the Wren properties in Nevada. Maybe you can give us a little more color on that as well.
Well, the Wren property was actually part of a transaction that we call the VEK, and what that is we bought a company, a small private company that owns royalties on actually 5 different projects, Wren being one of them. The company we're purchasing has a 50% of the royalties. So it's a 3% on Wren. It's a 3/4% on Marigold, the producing mine that SSR has. And then there's 3 other leases with royalties at Lone Tree, which is on care and maintenance right now, but they're exploring it. Pinson, that Waterton now owns, but Newmont is exploring around there, and another property down by the Carlin mine. VEK was started in the 80s by Ralph Roberts, who's really one of the pioneer explorers of the Carlin Trend, and identified a lot of the properties that became Marigold and the Gold Strike mine. And we're very excited. So we purchased, we have a royalty on Wren, and then once we did the due diligence and really dug in at Wren and found out that, we knew that there was a couple million ounces there that had been outlined by Centerra. We know that Barrick has had that property leased for over 40 years, making advanced royalty payments. So it pretty much occurred to, it was obvious to us they were going to go mine it. We just didn't know when. And then we found out at PDAC that they are actually drifting in towards the Wren deposit now. Again, not really public knowledge, because that Barrick don't go into a lot of details of what they're doing, but so that's we're so excited about Wren. If you go to our website and look, we're working on the website, but in the presentation there's some maps and shows where Wren is compared to Gold Strike and South Arturo, and it's right on the post fault. It's said we know there's a couple million ounces there. We think there's the potential for them to find much more there. And it looks like they're going to be working their way in there and mining that in the fairly near future.
Interesting. Okay, so Wren actually could become the flagship asset within Ely Gold Royalties.
Well, Fenelon is certainly we've been very lucky there, and they've had great success. It appears that they've outlined about 2.5-3 million ounces now in the high grade underground, right below the workings where they did the bulk sample last year. So we think they'll be going after that high grade fairly soon. They're applying for the permits now. So that could get a lot bigger, but Wren is in a place where the underground mine at Banshee and the Post Melky, which is contiguous to Wren, produced over 13 million ounces underground. The open pit there produced 45 million ounces from the open pit. So I actually placed a little wager with Eric Sprott that I think ultimately more ounces will be produced at Ren than at Fenelon. So very excited, and that's the reason why we then did the small transaction to buy the NPI. And I know you had a question on that, and so for your people, is you'll see that this is part of our business model and strategy. Is when we like an asset, we continue to look for more opportunities to take advantage of it. So with the NPI at Ren, of course, we have an NSR, but the NPI, we didn't pay a lot of money for it. I just from the work we did as far as looking at their costs of the underground mining at Goldstrike and the budget they have for CapEx. We paid $500,000 for that NPI, and we think if it could pay $10 to $20 million back if they produce a couple million ounces at Ren.
That's insane. Revenues is actually a good point I wanted to talk to you about as well. As a royalty company, obviously producing assets are key. You grow with cash flow. How much are you projecting for this year? And just since we're talking in the middle of a pandemic, do you see any impact on the cash flows?
Well, look, I'm actually working on that now, and we certainly have to look, and as you know, and the listeners probably know, Franco-Nevada, a lot of the royalty companies have started to withdraw their guidance for this year. We're young enough in the junior space that we certainly will adjust that. So we can't tell what will happen. We were thinking that if they got their permits, that we might see some production out of Fenelon later this year. Don't know what the impact is there as far as the work. I don't think if this gets over soon, I don't think it's changed the permitting, but we don't know if the permitting people are even at work. And now Nevada hasn't been as impacted as much. So, our producing assets at Isabella Pearl will continue to see income there. It's not a large one. Our per ton royalty at Jarrett Canyon will is continuing to produce. We're accruing royalties on the Jarrett Canyon royalty that we bought from Eric from the date we signed the deal in February 3rd, but we're not receiving those payments until the deal gets closed because we have to get shareholder approval next month at the shareholder meeting to make him a control person. I think there's no question things are being slowed down. But again, our focus in Nevada with a lot of our assets is it's pretty much been business as usual there.
Okay, because I've just opened the presentation, or I have the presentation here open on the other screen, and you're sort of forecasting close to $6 million in revenue, or total revenue for 2020. Is that right?
Yeah, that's where we are. I'm kind of like I said, I'm going to have to relook at that. That included probably about $1 million coming from Fenelon. We actually may see. We're just hearing some rumbling that they're increasing production here pretty quickly. We're not sure when at Jarrett Canyon, so that could actually go up. But we're looking at that. We're not withdrawing it yet, but that's been our most recent projection. Yeah, I'll say we have the NPI at Rawhide that we'll start paying later this year, and again we don't expect that to change. So.
What gold price did you use to calculate the total revenues? Because that could give you a huge lift as well, depending on what you used.
Yeah,
I can't see it in the presentation. That's why.
All those numbers are done at 1550, so I haven't really adjusted those up yet either.
There's a little wiggle room then, yeah. So that's good.
But I'm not going to get, like I said, we're not withdrawing that projection, but we are glad to have the wiggle room of some extra income from the higher gold price.
Oh, fantastic. You already addressed one of the questions I had, and I picked that one up on Twitter yesterday. So that was the NPI question, why you bought an NPI instead of an NSR just the other day. We talked about gold price. That's really important because we're trading at 1720. That should have a massive impact on all the royalty companies, give you guys a huge lift. But one thing I want to drill you on a little more, you still own projects. You don't just own royalties. That's correct, right? Because one thing I want to get at 1720, I really want to get a better understanding of the junior landscape here as well. So usually in this gold environment, that's usually when the shysters come out, right? And they start looking for assets and QT properties and stuff like that. Have you been seeing more of that?
Well, we've been really upgrading that part of our portfolio. We get inquiries all the time. We've had a couple of deals that have gotten put on hold because they were European companies that were couldn't make their site visits because of travel restrictions. But we do still have probably about 30 properties available for sale, where our model is that we don't do joint ventures. We sell the properties 100%. If they exercise and pay all the option payments, then they get the property, and we retain a royalty. So a big part of our portfolio, I mean, we're readjusting the way we show that in the presentation and on the website. But an example would be with Gold Resource Corp. I mean, we have a producing royalty there at Isabella Pearl. Now, that's a company that has operated out of Mexico for the last 10 years. They built a mine in Mexico 10 years ago with about 4 years of mine life and doing about 600 or 700 tons a day out of a milling operation there. 10 years later, they've been profitable every year. They're working out of 2 mines. They're doing about 1,800 tons a day, and they have about a 6-year mine life. So they've done the same thing in Nevada, and they came in and purchased Isabella Pearl. Mm-hmm. We actually purchased our NSR on Isabella Pearl from a third party, but we'd also had staked all the ground around Isabella Pearl. So we sold them that. And so all the expansion ground there, we have a 2.5% royalty on. Then we also sold them the Mina Gold Project and County Line projects, which are 2 satellite operations that are within 10 miles of Isabella Pearl. And we kept royalties on those. So we generated with deals to almost $2 million, and that's U.S. In sales to Gold Resource, and then generated those royalties, and now have a situation. Mina Gold has historic resources on it. They've done a bit of drilling there. They pulled off so that they could get the mine built. County Line, they've started to do a bit of work, but those are either going to become satellite mines or satellite deposits, and they're drilling on the extension ground at Isabella Pearl now. I mean, we think over the next few years, certainly in the next 5 years, we could be getting paid on 2, 3, maybe even 4 royalties in that Nevada mining unit of Gold Resource Corp.
Okay, that's interesting. Yeah, because I'm just trying to understand, like, usually at this time of day, like of year or seasonality, it's just looking bad. Like a lot of people that should be coming out, the House Street, Bay Street promoters, right, that are just looking at picking up assets on the cheap and trying to, pull one over on you. It's just really crazy. You mentioned something. Actually, we had a question on Twitter, and I'm going to switch over to the Twitter screen now. But one thing is outlook, sort of. Like, how do you see Ely develop 3 to 5 years down the line? The question came from Ed Austrian 007, and let's say gold price. Oh, I didn't see the gold price part before. I saw the first part of the question, but let's say gold prices are between 2,500 and 3,000 US at this point. For sake of our discussion, where do you see Ely Gold at this point, 3-5 years down the road?
Well, I'm not sure I have to ask the question if he's looking for a price projection or just our business model, but
I think it's towards the business model. Like target
I
price
hope so.
projection doesn't make any sense, like
Yeah.
to the moon and beyond, right? But I think it's more business model. How would that change and shape
Well,
up?
let's keep in mind one thing is that from the royalty side, higher gold prices, of course, for a royalty company mean higher revenues without higher costs. Actually, in today's market with oil prices down, it's actually very good for the producers as well. Generally, you have a lot of inflation and higher wages and that type of thing, but for the producers, but not for the royalty holders. So that part of it is good. The other thing is that these at these higher gold prices, we're seeing some of the projects that were, marginal at $1,500 gold a few years ago, and that now are being dusted off. And of course, gold went down to 12, 1,300, and those projects got put on the shelf. And now you're starting to see at $1,700 gold, there's actually more viable projects coming out, ones that were permitted. Gold, Fiore Gold, for example,
Yep.
has they announced that they're moving forward with their Gold Rock project, which is there near their Pan mine, and it's one where we have a royalty on it. And they all of a sudden that was a mine that we weren't sure we had it kind of in a development portfolio, but we've moved it up to the key assets because they're now talking about 2022 2023 production there. So
Interesting. Yeah.
things are getting advanced, and for our portfolio, that we're seeing several projects that are moving up in the scale. Mount Hamilton would be another example. So it looks good. And keep in mind for where we are today. I mean, we're still, if you look at us in the junior space compared to some of our peers, Metala, Abitibi, the junior royalty space is all about that development game and on the come. I mean, it's nice. We all have a couple, three producing royalties, but it's much more looking at the size of the assets and the operators and what the portfolio will look like 2 or 3 years down the road. So, whether gold's at 2,000 or 2,500, over the next couple of years, we will see Lincoln Hill go into production at the Coeur Rochester mine. We think we'll see expansion at Isabella Pearl. We're going to see increased production at Jarrett Canyon. We think the Wren will come on stream. We know that Marigold, the royalty we got at Marigold, they have a mine plan there, 43101, that shows our claims being mined starting in 2022 and through 2028 and beyond, depending on exploration. But so you can kind of get, we're going to have a very nice portfolio of producing royalties over the next couple of years if we were static and did nothing. And of course, we're not doing nothing. We started this year with the goal of last year we bought 4 producing or near-term producing royalties, and we started out this year with the goal of buying 4 more. Well, we bought 5 in the first quarter.
No.
We're at a very sweet spot right now with 100 million market cap. We're still, we think, at least by 50% undervalued compared to our peers in the junior space, and we're still in that sweet spot where a $5 to $10 million transaction, which is flying below the radar of any of the mid-tier or major royalty companies, can be very significant for us. It moves the needle. Something like this VEC transaction was, I think once we're able to get a 43101 done on that and really get the transaction closed first of all next week and really start to explain to the market what we have there. that's a transformational transaction for us. And you add that with Fenelon and some of the other things and the Jarrett Canyon transaction. I mean, we're in, our portfolio is really shaping up.
Yeah, one thing you mentioned actually is the calculation of assets, sort of based on the current gold price. I'm curious to see, like, when Barrick and Nevada Gold Mines, Newmont start recalculating their reserve base with a higher gold price. Like, what's that going to look like? Because everybody's been saying they've been depleting, but now the gold price sort of changes their reserve model a little bit as well. So I'm quite curious how that's shaping up. Also for the royalty companies, because your royalties theoretically should be more valuable, because those assets, I'm not sure what the mine plans in specific look like, but should be adding more ounces to the reserve base as well. So it should be looking better for you guys as well.
Right. Yeah.
So
and I think that.
Go ahead. Sorry.
I'm just going to say that I think at these higher gold prices, you're going to see them, having the cash flow to increase their exploration budgets and expand those projects as well.
Yeah, no, really good point. Since we ask all the questions, and I almost had to laugh when I saw it pop up here on Twitter, and it's one from left field, one you don't expect at all, I bet. But it's, should Trump pardon the Tiger King?
Should he pardon the Tiger King? I didn't know that. Is the Tiger King? Is he actually? Is he in jail? I thought he was.
Oh, okay. Like, the Netflix just put out a massive show because everybody was quarantined and self-isolating. It became the #1 documentary in history, probably, because everybody watched it, about this Tiger King from Oklahoma, right?
Correct.
And he got 22 years in jail.
Oh, I didn't realize he was in jail, to tell you the truth. I watched a few episodes, but I didn't realize he was in jail. But. I'd say yes. I'd say we need more Tiger Kings.
Okay, awesome. I'm going to leave it at that. We're running out of time, but I want to give you an opportunity, and you hinted at a few things already in the various answers, but put a bow around it for us. Like, what's up for Ely Gold the next 3 to 6 months? What can investors expect?
Well, I think you see more as doing more deals. We've got some on the property sales side. We've just completed the big transaction with where we purchased some claims, and then we did a $3 million deal to the guys at BlackRock. So we've got a few more of those. I'll say that I think is slowing down a bit, but because of just the travel restrictions. But I think you'll see us continue to do some significant royalty acquisitions. We're just seeing things open up and people coming back to us that maybe felt like they could wait 5 years for their royalty payment. Now are looking at setting up a family trust, and so I think you'll see more of that. And again, I mean, with our focus in Nevada, we're seeing the activity out there that the growth in our producing assets that I think will keep that revenue line fairly predictable here.
Fantastic. Trey, thanks for coming on. Please stay safe, stay at home, self-isolate, and order as much takeout as you can.
Okay, thanks, Kai.
Take care.